I am Dr. Divya Verma, Associate Professor in School of Management Studies, Guru Gobind Singh, Indraprasth University, Delhi. We are right now conducting the series on FinTech, and today's topic of discussion is financial innovation. In the last lecture, we talked about Indian financial system and how financial innovation has played an important role in reaching out to the development and the state where we are right now. So financial innovation in the present decade, in the present century, is playing a very important role in the economic development as well as growth of any economy. So financial innovation right now is dominated by technology. If we talk about the history of development of financial innovation, there are two distinct eras in the financial sector while we talk about financial innovation. The first one we can separate it from 1940s to 1970, which was characterized by strong control, interventionism and stability. The second phase, which started in 1970s and continued till the subprime crisis in 2007, so it was more of a period of deregulation and increased volatility. In the second phase, we could see there was lack of regulation, multiple innovation in payment methods such as credit and debit cards, transaction processing machines, ATM, telephone, online banking, and all such developments have taken after 1970s. We can also, look at the innovations that have happened in the financial sector with respect to before 20th century, during 20th century, and during 21st century. So banking was more of, in pre-20th century, banking was more of brick and mortar system of banking. Checks were very important, negotiable instruments were being used. Then electronic payments started coming in with some little bit of it. Credit cards were introduced in 1940s. In the 20th century, with ATM machines in 1966, they were evolved and banks started using it in US and later on in India as well. Internet banking also started in around 90s, and in 21st century we can see that mobile payments have come up so well. There are online cashless transactions systems which exist, and there are UPI transactions which nowadays what we see that even your digital lending platforms are available, open banking, embedded banking, and digital banking. And all of these things which you can see as the recent developments that have happened in financial innovation. So if we talk about the innovations and development in India specifically that have taken place in last 2 decades, which have led us to reach out to the state of becoming an emerging market economy. These include a lot of such policies and lot of such regulations that have come during the last 2 decades. So one of them is very important, that is Jan Dhan Yojana. So Jan Dhan Yojana is considered to be the world's largest financial inclusion initiative, and it has helped new bank account enrollment for over 450 million beneficiaries. And government also introduced direct benefit transfer schemes and accessibility of host of financial service applications like remittances, credit, insurance, pension, enabling fintech players to build technology based on this and penetrate to larger consumer base in India. Financial literacy development have also enhanced innovation in a big way. So setting up of National Center for Financial Education and implementation of Center of Financial Literacy project by RBI. So all of these steps have led to financial education and reaching out to all sections of the population. E-Rupee initiative, it's a person and purpose specific digital payment instrument to allow contactless and cashless payment solution and play an important role in the direct benefit transfer, which makes it more seamless and effective. The solution is being adopted for cashless payments for COVID vaccination also. India Stack again is a set of APIs that was designed by government that allow governments, businesses, startups and developers to utilize a unique digital infrastructure to solve India's hard problems towards presence-less, paperless, cashless service delivery. The India Stack has been driving force behind the accelerated evolution of all these fintechs which we see nowadays. It's one of the most important digital initiatives undertaken globally, aiming at putting up public digital infrastructure based on open APIs to promote public and private digital initiatives, and has played a catalytic role in India's digital foundation and evolution. Digitization in a big way has affected the development in the financial sector. So modern trends in banking makes it easier, simpler, paperless, signatureless, branchless, with various features like IMPS, immediate payment services, RTGS, real-time gross settlement, NEFT, National Electronic Funds Transfer, online banking, telebanking. Digitization has basically created a comfort of anywhere, anytime banking. It has resulted in reduced cost for various banking procedures, improved revenues, reduced human error, along with increased customer satisfaction, and has enabled the customers creating personalized solutions for their investment plans and also improve overall banking experience for them. Mobile banking developments, it's the future which is hinting towards acquisition of Internet of Things and voice-enabled payment services to become the reality of tomorrow. The voice-enabled services can be found in smart TVs, smart cars, smart homes, and everything which is smart. So top industry leaders are collaborating to adopt Internet of Things connected networks to create mobile banking technology that requires users' voices to operate. Unified Payment Interface (UPI) has changed the way payments are made in India. It is real-time payment system that enables instant interbank transactions with the use of mobile platform. In India, this payment system is considered to be the future of retail banking. It is one of the fastest and most secure payment gateways that is developed by National Payment Corporation of India and regulated by RBI. The year 2016 saw the launch of this revolutionary transaction system. This system makes fund transfer available 24 hours, 365 days, unlike other internet banking systems. There are approximately 39 apps and more than 50 banks which are supporting the transaction system. And after post-demonetization, this system played a significant role. So, in future, with the help of UPI, banking is expected to become more open. Blockchain again is a very important technological development that has happened. So it's a technology that works on principles of computer science, data structures, cryptography, and is core component of cryptocurrency. Is said to be the future of banking and financial services globally. Blockchain uses technology to create blocks to process, verify, and record transactions without the ability to modify it. Niti Aayog also has created India Chain, that is India's largest blockchain network, which is expected to revolutionize several industries, reduce chances of fraud, enhance transparency, speed up transaction process, lower human intervention, and create unhackable databases. Let's talk about different types of financial innovation. So technically, theoretically, what are different types in which innovations can happen? So innovations can happen in three types. First one is process innovation. Innovative financial business processes can give clients better services and boost the effectiveness of business operations. That is known as process innovation. These innovations can include new company procedures that boost productivity and open up new markets, among others. So for example, online banking facility is a kind of process innovation that has led to development and that has led to coming up of various other innovative ideas and various other innovative solutions. Second type of innovation is financial institutional innovation. So in case any innovation happens at the institutional level. So like advancement of financial system, which is a prerequisite of economic growth, depends on innovation. For example, some new kind of organization systems are set up, creating a regulatory framework that promotes innovation, globalization, growth of financial sector while maintaining a balance between private and social incentives. So any such thing which takes place is related to financial institutional innovation. Third type of innovation second type of innovation is product innovation. It introduces financial innovation, products or instruments such as weather derivatives and family wealth accounts, product innovation are also released to better adapt to the changing consumer demands or increase efficiency. So these are the basically three types of innovation: process, product and financial institution innovation. What are the enablers of financial innovation? When can financial innovation evolve or take place, or how growth happens in financial innovation, or why do people get motivated to innovate in the financial sector? So a lot of factors were there which have led to evolution or which have led to enabling the financial innovations in India. The technological advancement and payment system innovation is the most important. The kind of IT revolution that came, because of which IT, internet, now we have reached to a stage of artificial intelligence, cloud, and we talk about data is the new oil, and all of this has happened. So a lot of things that have happened in the technological sector that has helped grow the innovations in the financial sector. And the payment system innovations, which we have talked about in terms of UPI and in terms of the payment mechanism which exists for India, which is the most robust one. So that has also enabled a lot of fintechs and a lot of innovative instruments and products that have come up. Competition is a big enabler. Competition of leads to bringing in more innovative ideas by people, by institutions, by banks, and they compete with each other by coming up with newer ideas, newer products, and thus innovation flourishes in our economy. Globalization is a big time motivator why innovation will take place. So innovation, when it takes place in other countries, it doesn't stay over there. It comes out to India. From India we go abroad. And simultaneously exchange of innovative product and services happen only when the innovation is only possible because of globalization. Many a times market failures, financial insecurities, high systemic risks like crisis, any such situation also triggers the need of innovation initiatives. So whenever we listen to any fraud stories that some financial fraud has taken place, immediately you'll see a government regulation coming up, some innovative idea to curb that fraud, to curb this cyber crime. So innovation keeps on happening and such new product keeps on emerging. Whenever global crisis happens, so the global financial crisis of 2007, 2008 has led to so many innovative products and initiatives taken up by the government and regulators, because of which whatever innovation have happened till now, we always go back and look at the era before the pre-crisis time and after the pre-crisis time. So that is the level of innovation that takes place whenever any crisis or market failures take place. Many traditional banks are reinventing their business models to incorporate diverse digital channels, digitize financial services, digital communication opportunities. The main purpose is to provide better service to customers, compete with venture-backed disruptors. It's challenging to accomplish though, as most traditional banks follow brick and mortar model and hold the disadvantage of having infrastructure not fit to the modern world. So innovations are always good, and there are a lot of advantages of financial innovations. So if we talk about what are the advantages of financial innovation, many of the financial intermediaries start getting the benefits of economies of scale by bundling their related financial services, which can be delivered to customer preferring a conveniently offered suite of products. Another advantage of innovation is that internet and mobile technology have increased the ability to interact between businesses and the customers. In addition to that, technology has increased access and efficiency of direct delivery channels, offered lower cost, tailored financial products and services, and has also improved financial inclusion. Digital innovation has reduced transaction cost, enabled various innovative financial services and business models. Digital technologies can assist in lowering the cost of information collection, storage, processing, and exchange. There are some limitations also of financial innovation and fintech companies, which have come up. Fintech companies have de facto control over sensitive information, and users must be given some autonomy and control over their personal data, which is right now not happening. Fintech and big tech firms face cybersecurity challenges. So moreover, the attack which comes from interconnectivity that expands, service disaggregation adds more link to that cybersecurity challenges. The fixed cost infrastructure of technology does not reduce at the same rate as technology becomes obsolete. In addition, there are regulatory frameworks that are impeding the entry of new market participants. What are the supply side factors of financial innovation? Whenever innovation happens, it's market driven. Whenever financial innovation will take place, there will be two forces of demand and supply that will affect it. So we'll first talk about the supply side factors of financial innovation, then we'll come up to the demand side factors that have led to the development in the financial innovations. So there are a number of factors including technology, regulation, innovation spiral, or changes to the macroeconomic or financial landscape that have led to the supply side factors. Technology, how technology is a supply induced factor for innovation. When we talk about ATMs, the first ATM was developed in London in late 1960s, and it was a technological development that enabled the creation where a PIN code could be stored in a card. So that was the technological development which led to growth of ATMs. Even the present day online banking, high frequency trading, mobile payment are also technology driven innovation. So whenever something great happens in the technology, even the financial sector looks at that what it can take from that technology, and innovation does happen. Regulation is another supply side factor that is frequently found wherever financial innovation has taken place. For example, when global financial crisis happened, a lot of countries and bank supervisors or central banks were encouraged, that they told banks and their countries to move away from short-term funding. So they created collateralized commercial papers, which is a commercial paper issued by a special purpose entity with the proceeds of issuance used by banks to enter repo contract. So other instruments like futurization of swaps, callable commercial papers, extendable repos, evergreen repo contracts, all of these are examples of regulation based innovation, regulation driven innovation. So there are mix of factors that help peer-to-peer lenders to get a foothold and form peer-to-peer P2P business models. So otherwise before this there was no such model of crowdfunding or peer-to-peer lending which was available. Innovation spiral is also a supply side factor which leads to financial innovation. One innovation brings another innovation, that is known as innovation spiral. So there can be natural sequencing of innovation that happens. For example, you cannot market an index of credit default swap until you devise a product called credit default swap. So first of all, credit default swap was created, and after that an index on credit default swap was created, and then it was ensured that its liquidity is available. So that's innovation spiraling. You cannot even imagine a product until something before that exists. For example, credit default obligation, CDOs. It is difficult to conceive something like CDO squared. So you can think of an innovation itself as a supply factor. When you get an innovation, you get motivated to do another innovation because that one is linked to the previous one. Changes in the financial or macroeconomic landscape of a nation also is an important supply side factor. For example, after this collapse of housing market in US in this global financial crisis, so Bank of International Settlement talked about issuance of AT1 bonds so that the tier 1 capital gets managed by the financial institutions, and issuing of double and triple decker hybrid bonds also happened after this global financial crisis, which were first created in Japan and because of the very low interest rate environment over there. Many blockchain companies have attempted to offer solutions that will speed clearing and settlement and therefore reduce cost and online marketplace. Lenders have also streamlined traditional loan underwriting process in order to reduce cost. So all of these are macroeconomic factors based innovation. So when macroeconomic factors create such circumstances that it leads to promoting innovation or financial innovation gets created. So that is what supply side factors include. So second aspect of a market is demand side factors. So what are those demand side compelling factors which invites or which leads to financial innovation? So financial innovation can offer an array of new products and services. But if there is no demand, these products are not going to work. For example, like triple decker hybrid bonds, they do not exist now. Because when they were introduced, they were for a very niche market and their market never expanded or there was no demand for this product. So later on it just died its own death. So regulation, which was a supply side factor also, but it is also a demand side factor. It can contribute to the demand for new products and services. For example, the tier 1 requirement, if a bank has to fulfill their tier 1 requirement or have to ensure high quality liquid assets to be available in their portfolio. So in that case, a newer product has to emerge. So regulation can always lead to innovation. For example, when demonetization happened, at that point of time also, because of that regulation that some currency notes will be stopped from circulation now on, and people were asked to use more and more electronic methods of making payments. So UPI and Bhim apps and so many other apps got so popular at that point of time, and many new such apps and products were available in the market in next few days. Demographic is an important demand side factor. Demographic includes all those people who are the consumers of these products and services which are being offered. So financial institutions, they always look at that who's our consumer market. So they look at, for example, introduction of mobile financial services, mobile banking, payment. It is because of demographics. The popularity of Bitcoin and other cryptocurrencies, it's coming from the younger generation. So financial institutions are not blind to the demand of the younger generation. They are also responding to the demand with innovative products and services, looking at what is younger generation expecting. So all of these fintech companies which are flourishing in India, main reason is the huge consumer demand which is coming from convenience, which is coming from people looking at, they are getting, they should get the best services at their convenience. Let's discuss depth of innovation. How deeply rooted the innovation is. For an innovation to survive and exist and to flourish and to grow and to become an important, path-breaking innovation, what it needs to be that. So in that perspective, if we are talking about, we can say it as how deep is that innovation, or what is the depth of this innovation. So there can be three different types of depth of innovation. Innovation can be surface innovation, it can be genuine innovation, and it can be foundational innovation. Now let's discuss each one of them. What is surface innovation? Surface innovations are those innovative products and services or institutions which emerge, which do not change the fundamental nature of the product, but only have a superficial element. By their nature, these innovations are not very deep. So most of the financial innovations or new businesses, they emerge at this level. They come, for some time they will fulfill the need. Once they become obsolete, they can go. So such innovation may not stay for very long until and unless it is driven by demand and supply. For example, callable commercial papers. They could be called, these are commercial paper that can be called back by the issuer before it hits 30 days remaining of the maturity. It's an example of surface innovation. The innovation is the addition of callability feature of commercial paper. Commercial paper existed earlier also. So it's just that callable commercial paper. They have made it callable, because of which it is a surface innovation. It's an innovative product, but not much has been changed in the basic product. So the issuers are likely to remain the same. Overall risk profile of the product changes only slightly. Another surface innovation can be a new securitization that changes the structure of securitization, but the underlying product is still a securitization. Second type of innovation is genuine innovation. It is that innovation that changes the fundamental nature of the product and thus introduces a genuinely new product or service. So this one is basically more deeper than surface innovation. Obviously, the number of different products and services are relatively small in this category and they occur less often, but you will find that either they become very successful and they stay for long. So some of these innovations include issuing of some bonds or shares or stock which were issued for the first time in the life insurance sector, introduction of ULIP plans, which were unit linked plans so that insurance sector can be promoted. Some other examples of genuine innovation includes credit default swaps. So they were the first product which allowed investors to value and hedge the credit default risk. So these are some of the examples of genuine innovation. Third type of innovation is foundational innovation. It is the deepest level of financial innovation and it is going to affect the infrastructure, the underpinning of the financial system. It occurs rarely. If such innovation occur frequently, it will be hard for financial markets to operate because ultimately market need to stabilize to reach out to its normal functioning once such an innovation happens. For example, foundational innovation can be creation of banking system, introduction of double entry bookkeeping system. So they can be termed as something like which is foundational innovation. More recently, for example, clearing corporation the clearing corporation processes that were introduced, online trading which started in 1995. So they are foundational innovations. So to summarize, in today's lecture we have talked about the need of innovation, how innovation, historical evolution of development and innovation has taken place, what are different types of innovation, what are the drivers of innovation, who are the enablers of innovation, and how deep innovation can be. So if you realize that the innovation has happened at the surface level, at the genuine level, or at the foundational level, we can always make out that how long or how effective that innovation is going to be in taking charge towards the development. So that's all for my discussion on financial innovation. Your questions are welcome, your suggestions are welcome, and in case of any queries, you can reach out to us on the below mentioned numbers. Thank you so much for this discussion. Thank you.